Hello, my name is Autumn Ross, and this is my presentation over accounting ethics for Accounting 595. Ethics is defined as discipline dealing with what is good and bad and with moral duty and obligation. An analysis under the definition states, while ethics can refer broadly to moral principles, one often sees it applied to questions of correct behavior within a relatively narrow area of activity. My initial thought of this is an accounting transaction or a business transaction. At any point in time, any of the transactions that we do in business can prompt an ethical decision, whether it be a good or a bad decision. So what drives ethics? What I hold true to still within the research that I've done within this project is that ethics is driven from personal behaviors and business behaviors. When you encounter an ethical decision, your natural personal ethics, morals kick in. And following that will be your business behavior with any trainings that you've taken or any educational courses pertaining to ethics. What situations prompt an ethical decision? There are multitudes of examples of this question. I have an accounting background, so any point in time during my day and my thought process in ethics is anything that arises, whether it be small or large, in every transaction that I encounter, I think within an ethical state of mind. Within the public companies in accounting, there are regulatory boards. Here are a few examples. Financial Accounting Standards Board, Governmental Accounting Standards Board, Public Company Accounting Oversight Board, the International Financial Reporting Standards, and the International Accounting Standards Board. The Sarbanes-Oxley Act was enacted in 2002 by Congress. Regardless of the entity size, large or small, all must comply. Per the SEC, the act was mandated a number of reforms to enhance corporate responsibility, enhance financial disclosures, and combat corporate and accounting fraud, and was created the PCAOB to oversee the activities of the auditing profession. And also the act led to vast changes in accounting, not particularly corporate ethics. Generally accepted accounting principles. GAAP. This is a high overview of the principles that are included in GAAP. Recognition, what items should be recognized in the financial statements, your assets, liabilities, revenues, expenses. The measurements, which is incredibly important to me, what amounts should be reported for each of the elements that are included in your financials. Presentation, what line items, subtotals, and totals should be displayed in a particular area of the financial, and how might items be aggregated within the financial statement. Disclosures, what specific information is most important to the users of the financial statements, stakeholders, potential investors, employees, customers, and the disclosures both supplemental and explain amounts in the financials. Privately held business regulations. These are not limited to, but include Sarbanes-Oxley Act, audits, internal and external, shareholder fiduciary duty restrictions, shareholder remedy statutes, and Uniform Partnership Act. When you speak of accounting ethics, business ethics, the downfall of a company due to ethics, my first thought is Enron. This company was based out of Houston, Texas, and what I found interesting, considering I was doing this for my research, their founded month and year is actually my birth month and year. That was pretty ironic. But when you think of ethics, you think of Enron and what not to do. The top right picture in this slide is actually a code of ethics that was delivered to Enron's employees in 2000, which is incredible considering the actual health of the company was completely unethical and wrong. Another corporate scandal actually is another Houston, Texas related business, which I have found multiple businesses in Texas have had some negative effects of business due to ethics. This company actually reported $1.7 billion in fake earnings and was alleged to increase their depreciation time for their PP&E. And eventually there was a new CEO and management team that reviewed all of their financials and found the issues. Another common scandal is WorldCom. This one struck my interest, number one, due to the inflated assets by as much as $11 billion, which is an incredible amount of assets. And also, this was the scandal that preceded the Sarbanes-Oxley introduction by Congress. My resolution proposals, there are multiple areas and proposals that you could offer up to a business, to an individual, to an auditing firm for assistance in inflating the focus on accounting ethics and business ethics. A couple of my opinions and best practices. One, segregation of duties. Any and every aspect of accounting transactions and auditing process, whether it be internal and external, the checks and balances have to be there in order for business to run smoothly and accurately. Team collaboration. I actually use this in my business right now. For an example, cash transactions or the retrieval of any monetary payment. Certain entries, whether it be a high dollar value or a high impact transaction, a 2 or 3 person team partnering for the transaction so that from point A to point B, C, D, however deep your transaction has to go for it to hit your financial statement accurately, you have more than one person checking throughout the entire process that the transaction is going smooth, accurately, ethically, and that the business is reporting as accurate of a financial transaction as possible. Increase auditing on individual transactions. This is my opinion from CFO all the way down to an accounting clerk. An individual process and situational testing in an external or internal audit. From my experience, an audit would consist of multiple areas, one being an ethical test where questioned on if we were asked to do anything unethical or if we had concerns of any unethical issues with our business. I would take it one step further, have each individual that has any access to process a financial transaction to a situational test, strict time limit, nothing drawn out, quick on the draw answers. That way you can see what your employees have initial ethical response with their personal and business behaviors as they would act on. Your culture, your mission statement, and your training within your company, business is vital to breeding a strong ethical company. Tone at the top, all the way from CEO, CFO, president, whomever your top ranking officer is, from them all the way down, there has to be control management and focus with all of the employees to have a strong base of ethics. And everyone knows that it is within your culture. I cannot speak highly enough for reconciliations. As many recs you can do for assets, liabilities, expenses, they can find so many issues, whether it be ethical, just mistakes in general. Such a great tool that I use daily and could not live without. Here are a few of my references. I really enjoy this topic. I do encounter ethics every day. I'm a group controller for 6 dealerships in an automobile group. So we have multiple transactions daily. I have up to 20 employees that I oversee. And my ethics and each one of my employees' ethical values is highly important to me. And I hope that this research and presentation has shed a little bit of light on that. And thank you for your time.